Hi, this is PR Sundar. Welcome to this special episode where I'm going to show you a strategy to make money, hopefully. 95% of the people lose money. Today, in the pre-market, I just said, just for fun, why 95% of the people lose money in stock market. That's because two intelligent people can make money in stock market and two stupid people can also make money in stock market, but in between people don't make money in stock market. So that is why the 95% of the population belong to this category. They are neither too intelligent nor too stupid. Fun apart. And here I am going to give you a strategy, and in fact last year September I conducted a conference in Dubai. There I took some strategy in a live market, and then later in the same month there was a conference in Bangkok. I was a speaker there. So there I shared that strategy. So if you have not seen that video, you can see the video here. That strategy has given extraordinary profit, and it has given, if I am not wrong, nearly 100% profit in the last 1 year. And just imagine making 100% profit. I always say making money should be exciting process. That means in a business, money making is a boring, but in a gambling, money making is exciting. So money making process should be a boring process, not exciting process. That is why I always tend to trade. Of course, nowadays I am not trading, but as and when I used to trade those days, or even now I am trading in US markets. So as and when I trade in US markets, I don't trade in very short term intraday trades. I always trade with a longer time frame, maybe 6 months to 1 year. And in fact, I want to trade 2024 contracts. But the problem is that there's a parliament election. So usually I avoid trading in the year where there is a parliament election. So it's just nice. I'm under a trading ban by SEBI. My trading ban will end by next May, and parliament election will also be in the month of May. Parliament election will get over. So maybe in the month of June, I can start trading in 2024 contracts. Right now, I'm feeling that, our market is slightly bearish. I follow certain technical analysis. As per that technical analysis, the market is slightly bearish. That is number one. Number two, going forward for the next few months, in the last 4 months, Nifty has shot up so much from 16,800 to 20,000 it went. But next few months is going to be challenging. Why it's challenging? Maybe another 1 or 2 months, there will be an intense competition in 5 state elections. And then 5 state elections outcome will be sometime in the month of December first week or November last. That will be a period where there will be more choppiness. Right now, my view is bearish, but not very bearish, but slightly bearish. How a person can make some money if this is his view for the next 4 or 5 months. For the December, I think there are 5 months. So I'm going to show you from this software called Opstra. This is Nifty. I'll take December expiry. I look at the option chain. The first thing is that I'm bearish. So if I'm bearish, what I'm supposed to do? I must buy a put option. Which put option I want to buy? I want to buy 21,000 put option. This is 21,000 put option buy. I just want to buy 1 lot. Now the market is around 19,500. 21,000 put option if you buy, there will be about 1,500 point intrinsic value will be there. But what is the problem? To buy the 21,000 put option, you have to pay a lot of money. Here, you are paying roughly about 1,200 rupees. How to pay so much money? If your view goes wrong, everything will go to zero. By December, let us say market goes up and beyond 21,000. So this entire money will be lost. 1,200 rupees per share. That will translate into 60,000 rupees per lot. So this strategy is not for option buyer. So this strategy is for option seller. Here a person buy 21,000 put option by paying 1,200 rupees. The same 1,200 rupees, he must collect it back by selling some other options. What option? 19,000 put option, sell 3 lots. You do this, so this is called put ratio. It's called 1:3 put ratio. But if you look at the chart, you will make some money as long as Nifty is trading between 18,200 and 20,600. But even if the market goes beyond 20,600, nothing to worry because your loss is limited. Your unlimited loss will come only the market crash below 18,000. As I said, I'm bearish but not too bearish. This is number one. Number two, if you look at the margin money, so you are paying about 1,35,000 as the margin money. I do not know whether this Opstra is showing the correct margin. I think the correct margin should be around 2 lakh rupees. Now, here you are buying one option and selling 3 options. You are buying one put option, selling 3 put options. For one buy, one sell, there is a margin benefit. So that means the remaining 2 put options, it become naked put options. Since you have 2 naked put options, if you sell 2 call options, your margin money will be very, very little. I'm sure, I'll tell you, if you sell a put option, you have to pay span margin and exposure margin. Normally, span margin is about 80,000, exposure margin will be about 20,000. So you pay 1 lakh margin money if you sell one put option. If you sell one call option, also the same thing. About 80,000 span margin, 20,000 exposure margin. But if you do both put option as well as call option, for selling put option, you pay 80,000 span margin, 20,000 exposure margin. But when you sell call option, your span margin will be 0. Why? Because you have the risk only on one side. Market cannot go both up and down at the same time. Therefore, the span margin on the other side will be 0. You will be required to pay only the exposure margin. So that's why if you sell only put option, your margin may be 1 lakh. If you sell only call option, your margin may be 1 lakh. But if you sell both put option and call option, your margin will not be 1 lakh plus 1 lakh. It will be 1 lakh plus 20,000. All these are approximate figures I am talking. Since you have 2 naked put options, if you sell 2 naked call options, and the margin money will be very, very little. So what I am going to do, I am going to sell 2 lots of 21,000 call option. So now look at the strategy. Buying 21,000 put option, sell 3 lots of 19,000 put option, sell 2 lots of 21,000 call option. Now if you look, first, the probability of profit is about 66%, but don't look at it. And the maximum profit is about 40%. Assuming that your view goes right, you may not get the maximum profit, but assuming that you are getting 50% of the maximum profit, still you are getting about 20% return. And 20% return, for a period of 5 months, that's about 4% per month, which is an extraordinary return. In Twitter, people can come and say, I made this much money, I made this much money, but that SEBI data says 95% people lose money. Okay, so therefore making 4% per month is a very good return. Again, I do not know whether these margins are correct or not. I think this margin is correct, I think. But look at the risk reward. Look at the break even. Right now, market is 19,500. So your lower break even is around 18,000. Upper break even is 21,000. That means 1,500 point down or 1,500 point up. So you don't have to worry. And your loss will begin only if the Nifty falls below 18,000 or if Nifty shoots up beyond 21,000. Usually, my friends, my close friends, they are all like high risk takers, so they don't buy the hedge. If you want to make this as a limited risk strategy, 500 point down or 1,000 point down, you can go and buy a put option, and 500 point up or 1,000 point up, you can buy a call option, so that your risk will become limited one. I do have some friends who are always afraid of black swan event. So they'll say, sir, you give me strategy, no matter what strategy you give me, it must be limited risk strategy. So for them, I tell them, okay, you can go and buy. Maybe we sold 19,000 put option, say buy 18,000 put option and buy 22,000 call option, so that the risk becomes limited. And for people who are ready to take unlimited risk, I just give them this kind of strategies. This strategy, in my opinion, will give a good result. Now, sir, you are bearish, so you are doing this strategy. I am not bearish and I am bullish. So what strategy I should do? So if you are bullish, all you have to do, you have to just do the opposite. Let us say, if you are bullish, same December contract I take, buy 19,000 call option. Buy 19,000 call option, you are paying around 1,200. So you have to get back the same 1,200. What you need to do, but 21,000 call option is trading only about 200 rupees, but 20,500 is not trading. So you have to do this one only. So maybe you have to do 4 lots you have to sell. Because 3 lots you sell, you will not be able to collect the money. So this becomes 1:4 call ratio. Again, as I said, 1 buy, 1 sell margin benefit will be given. So you have 3 naked call options. For that you sell 3 naked put options. 3 naked put options where you want to sell maybe 18,000. But the problem in this, it is a net debit strategy. So the credit is not getting. So because we are not getting credit, what you can do, maybe 18,000 put option, 3 lots, you sell only 2 lots. And 1 lot you sell 19,000 put option. So we do a little bit of adjustments like this, so that to make it a credit strategy. Now again you see your risk is from 19,000 to 21,700. Below 19,000 also the loss is very, very limited because there is only 1 lot of 19,000 put sell. We have done it just to adjust the premium. So you are doing this. So you see here also it is the same thing, around 40% profit and margin is about 2,80,000, and market goes higher, you make profit. Here if the market goes lower, you make profit. Then if somebody say, sir, I am neither bullish nor bearish, sir, so what I should do, right? So what you can do both the strategies together, so that when the market goes up, you get profit here, no loss, no profit there. Market goes down, the vice versa. So maybe I can just show you here in the same one. This is a call ratio. Now add the put ratio here. In put ratio is 21,000 put buy, 19,000 put sell 3 lots, 21,000 call sell 2 lots. So means I am combining both the strategies. When you combine both the strategies, now you see from 18,300 to 21,500. Wherever market goes, you are going to be in a profit. But this is just another version of Straddle only. Straddle also like that only, right? You simply go and sell 21,400 call, 18,200 put. You are going to make profit as long as markets are trading in this range. But advantage here is that sometimes when market goes higher, now you feel that market has gone up so much, it may correct. So what you can do, whichever strategy, call ratio and put ratio, whichever is in a good profit, you can book the profit. The other one you can see later. So that kind of adjustments is possible. So that is the idea. So here margin, is again about 5 lakh rupees, but profit is about only 22%. 22% still for 5 months is still 4% per month. And here no need to take half of the profit because this is a non-directional view. So wherever market goes, you are going to make profit, but you will be in trouble only if the market falls below 18,300 or market shoots up beyond 21,500. So these are the strategies I used to discuss in my workshops, but now this strategy I've given free. So hope you enjoyed watching this video. Thank you for watching. And if you make a loss, don't curse me. But if you make a profit, please remember to appreciate me. Thank you.